Stablecoins? Wake up and it's 2 trillion bucks. Alright, folks. Check your wallet right now. How much cash you got in there? 10 bucks? 50? Well, soon, that paper cash is gonna transform into digital dollars, popping out of your phone and zipping across the globe. It's called a stablecoin. And guess what Scott Bessent, yes, Trump's treasury guy, ex-Soros fund manager, just said? Hey, this thing's gonna hit $2 trillion in 3 years. Wait, what? The market's only at 150 billion now. 2 trillion? That's not your neighborhood supermarket points program, pal. But this guy doesn't just talk for fun. This dude's nose for money? Basically a bloodhound. If he's sniffing around crypto, might be worth dipping a toe into, right? But if you don't even know what a stablecoin is, well, stick around for the next few minutes. By the end, your bank balance might just start wiggling with new opportunities. Stablecoins, the seatbelt of crypto. Alright, let's roll. What's a stablecoin? One line crypto's safety belt. Bitcoin? If it goes up, it's a gangster. If it crashes, it's an outlaw. Way too shaky. We needed some motion sickness pills. So here comes the stablecoin. A digital dollar pegged 1-to-1 to the real deal. Got 100 USDT in your wallet? Somewhere out there, there's supposed to be 100 bucks backing it up. Supposedly in theory. Now, I know what you're thinking, isn't that all a scam? Good point. That's why Tether got smacked with fines by the New York AG, got scolded by the CFTC, and the CEO got up on stage, begging, "Trust us, please." But here's the kicker. People still use it. Why? It's just too damn convenient. Storytime China, 2017. They shut down all Bitcoin exchanges overnight. So what did Chinese traders do? Oh really? Fine, we'll just use stablecoins. They pumped Tether offshore, kept buying and selling Bitcoin. Tether USDT dropped in 2014 and still tops global stablecoin use today. China's 2017 crackdown just made Tether blow up in China. So yeah, China built stablecoins? Pretty true. But China invented them? Nope, that's not how it happened. You can slam borders shut, but money finds a way. That's the core instinct of stablecoins. And honestly, that makes them scarier than Bitcoin. Why? They don't make noise. They creep in quietly, and they swallow everything. Your bank account, your debit card, your bank branch, heck, even your mom's wallet. Why is the US pumping this? Bessent's game plan. Alright, back to Bessent. Why is he so gung-ho on this? First, emerging markets crave dollars. So why ship boatloads of paper dollars overseas? Just beam them over the blockchain, instant delivery. Simple. Second, ever sent money abroad? The fees, the waiting days, the bank teller making you sign 10 forms, it's a nightmare. Stablecoin? Open your app, done in 5 seconds. Fee? 1 cent? Might even haggle that down. Third, dollar dominance, baby. China and Russia keep trying to dethrone the greenback. Stablecoins turn the dollar digital, upgrade it to a borderless emperor. Bessent calls it dollar 2.0. When the paper dollar retires, the stablecoin's the heir to the throne. The dollar gets coded, so, banks, oh, here's the fun part. The dollar's getting coded. Programmable money. What's that mean? You can slap conditions on your cash. Where, when, who, all preset. Government wants to send you subsidies? They'll code it in. No booze for you. 30% can go on food delivery only. Done. Banks? The days of charging fat fees for wiring money? So long. Now it's peer-to-peer, straight up. Money's coded, people are wallets. Banks? Well, the new lingo is bankerless. Regulation? Here comes the rule book. So, can anyone launch a stablecoin? No. Look at Tether. No audits for ages? Boom. Fined, reputation in the gutter. So the US pulled out the big book. The Clarity for Payment Stablecoins Act, the Genius Act. Don't those names just scream we mean business? Key points. Show us the collateral. Got a dollar? Issue a dollar. Cut corners? We cut you down. Banks, tech firms, follow the rules, and you're good to go. Why? So Wall Street doesn't freak out, they want to know it's safe to play. That's how the market grows. Who's gonna dominate? Your phone. So who's gonna send all these stable coins around? Answers in your hand. Galaxy? iPhone? Ding ding ding. Banks? Accounts? Cards? They won't even get to the door. Your phone is the new world bank. No banking network needed, just tap, send, done. Samsung and Apple? Their payment rails are already set. Samsung Pay, Apple Pay, just add Samsung Coin, Apple Coin on top. Banks know this. That's why JP Morgan, Citi, Bank of America, all secretly brewing up stablecoins in-house. But who's closer to the customer? Your phone. So yeah, Apple versus Samsung, that's the real fight. Can Samsung pull this off? Even gobble up treasuries? Imagine Samsung drops its own stablecoin. They'll need to back it with US treasuries. Loads of them. To America? Samsung becomes one of its biggest bond buyers. To Samsung? Every Galaxy sold is also a pocket-sized bank. They run the payments network too. Then your Galaxy isn't just a phone, it's a global payment hub. MasterCard? Visa? Sorry, stablecoin peer-to-peer jumps right past them. Fun fact: in May 2025, Visa stock tanked 7.69%, MasterCard 8.96%. Antitrust ruling. In June, the US Senate passed the Genius Act. Visa and MasterCard dipped another 2%. Makes sense now, huh? But what about a Korean won stablecoin? People always ask. So, if we make a Korean won stablecoin, can we protect our monetary sovereignty? Answer: no. Why? Cue the Trilemma. Monetary sovereignty? Ever heard of the Trilemma? The Trilemma, the impossible trinity. A country wants three things: fixed exchange rate, free capital flow, independent monetary policy. You can't have all three. Pick two. Fixed exchange, free capital flow, bye-bye monetary policy. Fixed exchange, independent monetary policy, gotta control capital. Free capital flow, independent monetary policy, kiss your fixed rate goodbye. Examples: Hong Kong pegs to the dollar, but their interest rates dance to the US. China used to keep tight capital controls to hold its peg. Korea? Floating rate, free capital flow, so our one jumps around. Now, dollar stable coins, free capital flow, dollar peg, independent monetary policy goes boom. Central banks can tweak rates all they want, useless if money just flows out as stable coins. So why is the US really doing this? For America? It's perfect. If the whole world's using dollar stable coins, dollar dominance lives another 100 years. But here's the twist: the US actually hates a super strong dollar. Bad for exports. Thing is, stable coins naturally push the dollar stronger. So they'll pump it up, but not too much. That's peasant's tightrope walk. So what's Korea doing? Samsung, Naver, Kakao. Us? Local currencies stable coins? Forget it. There's only one play. Samsung, Naver, Kakao, go global with dollar-backed stable coins. Samsung's got the phone, Naver's the platform, Kakao's got payments. Stack them together, we can ditch Visa and MasterCard too. So the one stable coin shouldn't just be local only. It needs to be a global bridge coin, dollar collateralized. Bottom line, it's not optional anymore. Guys, banks were just fancy couriers. You gave them gold, they gave you a receipt. That's it. Today, your phone does that job. Galaxy phone, Galaxy watch, Naver Pay, Kakao Pay. This is the new financial network. Tech's eating finance alive. Stable coins aren't crypto motion sickness pills. They're bankless banks, central bankless money, programmable cash. If Samsung, Naver, Kakao don't go global, we'll just end up using someone else's stable coins. The chance is here. You in, or not? That's it.